Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachurdiz and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing upcoming UK data and the outlook for sterling. So Rafi, the Ukraine war is pushing up oil and gas prices even higher than they already were, and consumers in the UK will soon feel even more of a squeeze. Has the government or the Bank of England indicated any sort of change to their policy courses so far?
Well, Maria, that really is a very good question because the UK government is under a lot of pressure to provide more assistance to families, as many British households will soon face a double squeeze, not only from higher energy prices, but also from higher taxes. And that's because as of April, national insurance contributions will go up in the UK. But while it's possible the government may provide some additional support, it hasn't signaled anything as of yet, other than the package it had announced back in February, which was criticized for not going far enough. Now, we also haven't heard anything much from the Bank of England about the possibility of the conflict in Ukraine derailing its rate hike path. It's probably too soon for policymakers to know how big an impact the war and the sanctions on Russia could have on the UK economy. However, we should get some idea next week as the bank holds a scheduled policy meeting. So although it's almost certain that the Bank of England will hike rates by another 25 basis points next Thursday, what's going to be more interesting is how worried they're going to sound about the Ukraine crisis. Now, the reason why the Bank of England isn't panicking just yet as much as the ECB is that, unlike the Eurozone, the UK isn't that reliant on Russian oil and gas exports as Euro area countries are. And the bigger concern is the indirect impact from high energy prices on the UK economy. So the BOE will probably be more data dependent throughout this crisis than the ECB.
Do you think the data coming out on Friday will have much of an impact on the pound? And what's the outlook for sterling in the bigger picture?
Well, the data will probably be considered a bit outdated as it is for January, which was before the events in Ukraine started to unfold. Moreover, there were still some Omicron restrictions in place in January, so February data will probably be a better indicator to see where things stood with the UK economy before the crisis began. On the whole, though, should we get some better than expected numbers on Friday because we do have quite a bit of data coming up. We've got GDP, industrial production, the trade balance. So these could provide some support to the pound in the event of another sell-off. For now, though, sterling is benefiting from the improved risk tone we're seeing in the markets, and it's looking a lot steadier than early in the week when it hit a fresh 16-month low against the US dollar.
Rafi, thanks so much. And thanks for joining us at xm.com.